and welcome to AGS Transact Technologies Limited Q3 and 9 months FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Goyal, Chairman and Managing Director, AGS Transact Technologies Limited. Thank you, and over to you, Mr. Goyal.
Thank you. Good afternoon, everybody. A very warm welcome, and thank you for joining our first earning call post our listing. On this call, we are joined by our CFO, Saurabh Lal, and SGA, our investor relations advisors. Let me begin by giving you a quick snapshot of our company, and then we will take you through the operational and financial performance. Digital payments in India are growing at an encouraging pace. Digital payment is a key focus area for us as well. We have been very focused on the acquiring side, that is the POS acquiring side. We have created a world-class platform and infrastructure called OnGo. We are deploying these POS machines directly, and we offer end-to-end processing of POS payments, which includes merchant POS, transaction processing, settlement with Master, Visa, RuPay, and different card schemes, reconciliation of funds, and transferring the same to the merchant account through sponsor banks. Our major success in POS deployment came from the deployment of POS for oil marketing companies, that is IOCL, BPCL, and HPCL. We pioneered an integrated payment solution for the oil marketing companies, and today over 22% of fuel retail outlets in India use POS services offered by us. We intend to continue our penetration in this segment. We have contracts from all 3 major oil marketing companies have an order book of approximately 50% of retail outlets across the country. The size of the fueling industry is around 8 lakh crore, wherein right now only 30% transactions are digital, rest are still in cash. And out of this 30% digital business, approximately 60% is done via point of sales systems using various card schemes of Master, Visa, RuPay, American Express, and approximately these transactions account to approximately 160,000 crore annually, and it is consistently growing. And as we see more and more digital penetration, we will see this 160,000 crore also increasing in future. We target to have approximately 50% of this GTV through our POS in months to come when we finish our complete rollout at all the oil marketing company retail outlets. I would also like to highlight that POS penetration will receive a boost from the adoption of more digital payments and also through OnGo value-added services offering. On VAS front, our POS machines are offering various value-added services like cash at POS, micro ATM facilities, selling of insurance policies, mainly for two-wheelers, and what is going to be the most interesting would be loan against card receivable platform. Now, this loan against card receivable platform is being built so that the merchant can avail the loan through our digital platform in fraction of minutes, and it can be done digitally. It can be prepaid digitally. It can be for 1 day. It can be for month. It can be for year, depending on the credit history of the merchant. And this we are very excited to roll this platform, and we see a very good business opportunity there. Also, the government policies have been incentivizing OMCs and their customers toward digital payments, like 7.75% digital incentive, which is also driving a shift in the payment methods and fuel stations. And as I mentioned that, this 30% digital transaction at the fuel outlets should grow substantially in days to come. Also, there are some good initiatives from Government of India on RuPay incentives to be provided to the acquirer and issuer, and that also would benefit us in a long run. Going ahead, we expect strong growth in our digital side, led by our two strong digital platforms. One is Ongo and second is Fastlane. We have received a PPI card from RBI on a perpetual basis, and we are creating a platform which where we are attracting more merchants and consumers to join our Ongo ecosystems by pivoting from payment as a service to payment as a convenience. Ongo ecosystem basically allows consumer to use one single payment system to make payment at POS terminals through various modes of payment, including cards, RFID, QR code, on UPI, etc. We have also entered into a strategic agreement with RBL Bank in relation to a proposal to provide an integrated prepaid card solution based on NCMC technology at Bangalore Metro Rail Corporation, and this includes even the issuance as well as acquiring of the NCMC cards which would be issued. This card obviously, as NCMC National Common Mobility Card, it would be used primarily for transit, but being a RuPay card, this can be effectively be used for online and offline payments. We also have a very innovative product called Fastlane, which is a fueling mobile app which we have deployed for HPCL at their Mumbai and Pune outlets. Right now, approximately 144 retail outlets are live. We intend to grow this concept of controlling the whole fueling process through a mobile on a pan-India basis with various oil marketing companies. Talking now about the cash, we have seen that the cash in circulation has been consistently increasing. The pre-demonetization used to be around 18 lakh crore. We have seen everything has come back. In fact, there is an article today which talks about 30 lakh crore plus of cash in circulation, which is approximately 14.5% of GDP, one of the highest. And every month, this cash in circulation is growing. We have seen that the reason being there have been a lot of approximately 43 crore Jan-Dhan accounts being opened, and that has also bringing more and more people into the banking channel. Also, we saw a lot of money coming into the financial channel during demonetizations. At the same time, we are seeing that direct benefit transfer is growing which used to be few years back to around 75,000 crore, has already reached to around 5 lakh crore. So we see more and more money coming into the bank accounts, and obviously the consumers, the customers are going and withdrawing this money either from bank branches or from an ATM. We have seen that in India, still around 1.6 times the cash in circulation is being dispensed through an ATM. This is still quite less compared to Russia and Brazil, which is talking about 6 times plus ATM dispensing compared to cash in circulation. So if we are talking about around 20 lakh crore as a cash in circulation, then we would dispense around 32 lakh crore through an ATM channels. So we see that it is a very, very important channel for cash being dispensed through the ATMs. For banks, still the ATM is the most cost-effective channel for cash dispensing. Like if a customer walks it into the branch, it costs bank approximately 60 rupees to provide that infrastructure, whereas if the customer walks it into the ATM, it costs them only around 17 rupees. And apart from providing 24/7 convenience to the customer. So we expect the volume of cash payment transactions and consequently the demand of ATMs and what we call it as a CRM, that is a cash recycling machine, which has been very recently been very popular, to continue to grow in country. Cash recycling has been particularly very, very popular because it provides again 24/7 convenience to the customer for cash deposits. And what we have also seen, the focus from bank side to convert more transactions from physical to electronic by providing what they call it as an electronic lobby. They want to basically reduce the size of the physical branch, reduce the number of physical tellers, and provide 95% of the transactions on to an electronic channel, which would be like just outside the branch, what we call it as an electronic lobby, having ATMs, having a CRM, that is a cash recycling machine, having various types of kiosks like check deposit kiosks, passbook kiosks, and internet banking kiosks, so that customers can really walk in and do 95% of the transactions which they would have done it in the branch by 24/7 and provide good convenience as well as less expense to the banks. Being one of the largest and most integrated players in the ATM/cash management business gives us a significant competitive advantage in winning long-term mandates from banks. Given our integrated offerings, we are very well placed to benefit from both surge in digital payments as well as cash in circulation. AGS has created one of the largest integrated omni-channel payment platform in the country. We provide cash payments and digital solutions to banks and corporate clients. On the cash payment side, we are very strong in the ATM outsourcing business, offering long-term contracts with majority of the banks from 7 to 10 years, where we deploy ATMs on behalf of the banks, either on a transaction model or on a fixed monthly model. One important component of this ATM outsourcing is cash management, and we have our fully owned subsidiary called Secure Value, which is specializing in cash management. It manages cash for our captive ATMs as well as for other managed service providers. Secure Value is completely compliant with all the regulatory guidelines of RBI and MHA. on a pan-India basis, and we continue to see a good growth in this business. Our long-standing relationship with our technology providers, Diebold Nixdorf and ACI, have played a very critical role in attaining our market position and enabling us to be a leader in the payment solution industry. Equally, our deep relationship with our customers across industries puts us in an advantageous position for new business and cross-selling opportunities and enhances our market reputation. Over the years, strategically, we have grown the share of our service revenue from 83% in FY19 to approximately 88% in FY21. When we talk about the service revenue, what it means is a kind of a recurring revenue which is in nature, and it is backed by long-term contracts. We manage ATM for all three largest private sector banks and the largest PSU bank in India. We have a strong order book of approximately 50,000 POS from OMCs under our digital business. What we have seen is that the platforms which we created on digital side, OnGo and Fastlane, as well as the success in ATM outsourcing, we have found a big opportunity in Asian markets, and we, through our wholly owned subsidiary called Global Transact, we have invested 90% in Novus Technologies based in Singapore, and we have a presence in 5 countries. So we have in Sri Lanka, where we have won the largest outsourcing contract of the country by deploying digital branches. That what they call it digital branch, and what we call it here is an electronic lobby. We have deployed more than 200 digital branches for People's Bank of Sri Lanka, and is one of the largest in that country. We have also formed a joint venture with the subsidiary of BCA Bank for deployment of point of sale in Indonesia, and that is going to be our focus area for the next financial year. We have also won a major contract with the joint venture company called BPAKR. The BPAKR is one of the largest, one of the big oil marketing company in Indonesia. It's a joint venture between British Petroleum and AKR, and there we have won the contract for rolling out the complete automation as well as the complete payment system and our Fastlane product in that country. It is already we have already deployed in more than 20 outlets, and it's going to be rolled out throughout the country in next 1 year's time. Our other success has been in Philippines, where we have tied up with one of the largest private sector bank called RCBC for deployment of point of sale solution in that country, and the focus has been mainly for financial inclusion for the tier for their rural cities. We have also started our presence in Cambodia, and we are working with few large banks for deployment of point of sale solution in that country. So we plan to continue to leverage the technology and the products which we have developed in India and provide these to these 5 countries which I mentioned. Coming to recent developments and our business performance in the quarter, as of December 31st, 2021, we have approximately 227 940 total number of terminals, POS terminals which we have deployed. Out of this, approximately 40,000 POS terminals are deployed at OMCs. We have approximately 32,485 ATMs and CRMs under our managed service portfolio, and we have been providing cash management service to approximately 45,000 plus ATMs through our fully owned subsidiary Secure Value. For 9 months ended December 31st, 2021, we processed approximately 923 million switching transactions. We have processed around 140 million merchant transactions with a GTV of approximately 228 billion rupees. During the 9 months ended December 31st, we successfully expanded our operations to cover more than 2,200 cities and towns, servicing approximately 450,000 customer touch points. With a healthy growth in our network and transactions, we delivered strong financial performance. 9 months FY22 with total income of approximately rupees 1,392.3 crore, 26% year-on-year growth in EBITDA, and 59% jump in digital payment solution revenues. We have closed the quarter with a healthy order book with all leading OMCs in India under our digital payments and with banks under ATM outsourcing and banking service business. Typically, we experience a lot of purchase orders getting closed in the last quarter of fiscal due to budget closures and year-end closures. Accordingly, Q4 forms the largest quarter in the financial year in terms of revenues. In Q2, we were very optimistic about our Q4 performance, but in January, because of Omicron, there could be a spillover of certain orders, including orders from PSU OMCs. With combining of these factors, we expect to close the year with a total income of approximately 2,000 crore plus in this financial year. After completing our IPO in January, the company has redeemed the outstanding NCDs, which was part of the object of the offer. Of the total OFS of 680 crores, we have infused 50 crore back to the company to deleverage. As a result, the company's debt has come down from around 1100 crore to 486.5 crore as on 31st January 2022. With the reduced debt levels, the company's debt to equity as well as debt to EBITDA is going to be less than 1. The company will save approximately 100 crore in interest costs, which could be reflective in FY23. To summarize, our near-term objectives will therefore be to grow and scale up digital business, pivot from payment as a services to payment as a convenience through Ongo card and ecosystem, continue focus on the cash side with our ATM and outsourcing and managed services along with cash management services, focus on improving cash flows and profitability, and grow our leadership position in ATM business while growing other verticals, thereby making the business highly scalable and profitable. That's all from my side. I would like to hand it over to Saurabh Lal, CFO, to discuss the financial highlights.
Thanks a lot, Ravi. Thank you, everyone, and good afternoon, everyone. So with respect to the business, I think Ravi has given you all the updates. We will definitely like to take some questions in the Q&A round, especially on the business side. But I would like to take you through the financial performance of the company. We'll start with the consolidated performance of the company, starting from the Q3, which is December quarter for FY22. So from the financial number, the total income which company has generated in the Q3 stands at 493 crore rupees for Q3 FY22, as against 469 crore for Q3 for FY21, which is a 5% year-on-year growth. If you see our businesses, we discussed on various business which Ravi has also explained. So when we as a company see our business internally, we have three major segments under which we value our business or measure our KPIs. The first business is the payment solution business, which has two sub-verticals. One is the cash business, which takes care of ATM outsourcing business and our subsidiaries cash management business. Second business under payment solution comes is a digital payment business, which is primarily driven by POS acquiring, happens to our wholly owned subsidiary ITSL, and our switching business with our tie with ACIs, where we offer switching solutions, and transit and toll businesses, where we have again expertise in providing payment solutions in transit and toll. The second segment in which we see our business is banking automation solution business, which is primarily driven by sale of various banking and ATM products. We have a manufacturing setup for ATMs, and service revenues and upgrades revenues, and totally maintaining the life cycle of those ATMs till the expiry of those ATMs. The third vertical, which is called other automation solution vertical in our business, which is primarily again driven by sale of various automation products to retail industries, color industries, and the petroleum industry, which means retail stores, colors companies like Asian and Berger, and the petroleum automations on behalf of HPCL, IOCL, and BPCL, and again running a life cycle contracts for maintaining those machines and servicing those contracts for a life. So our total income includes considerable other incomes also, which we want to cover, which is part of our other incomes there. But if you see in other income, our two of the most critical component that comes in other income is income from the insurance and the income from the deposit of lease. We would like to give an update that since our total revenue have these two components, so these are primarily a business revenues for us. Why? Because insurance income is taken as an income because of the nature of the business, and in case of any loss happens to because of the insurance, like we handle cash in the ATM, we handle cash in the van, we handle cash in the vaults. So all those losses, if they happen, as taken as a P&L item in the expense side, so that income we classify them as other income though because of the accounting standard requirement, but we internally track this as a business income. Similarly, as we have adopted Ind AS 116 way back in 2019. From that year onward, we have a lot of leases in our books where we have put it in our ATM under outsourcing contract. So all the deposits that have been given to the landlords or any other deposits that company has given, so that interest income on that deposits under the Ind AS 116 also qualified as other income. But since the expense of rent in the form of depreciation and interest is going in the P&L, we also track this internally as a business income. So while computing in EBITDA, we would take this as a normal business income in our revenue streams. So now coming back to the EBITDA, if you see the EBITDA which company has generated in Q3 of FY20 is standing at 27.6 crore rupees versus 121.6 crore in the Q3 of 21, which is again a YOY 5% growth. The EBITDA margin of the company for this quarter ending FY22 and the quarter ending 21 was absolutely strong, and we continue to maintain the EBITDA margin of around 25.9% both the quarters. As I said, we have an Ind AS impact in our revenues and on our balance sheet and financials. If we see our EBITDA, excluding the Ind AS adjustment specifically on the lease part, our EBITDA for Q3 period for FY22 stands at 89 crore rupees versus 78 crore rupees for the Q3 of FY21, which is a Y-on-Y growth of 14% on the EBITDA, excluding the Ind AS adjustment. Similarly, if you see the finance cost of the company, which is at 60.9 crore in the Q3 of FY22, it has component of lease, which is around 11 crore rupees of interest in that lease part, and also, as we said, we have repaid that NCD. So NCDs also have a considerable portion of the interest, which is around 25 crore rupees. That is what we're targeting, that by FY23 we'll have this 100 crore rupees of saving from the finance cost. The company's net debt position is also very healthy now with respect to the net debt of the company stands at around 486.5 crore as of 31st of January 2022 after the redemption of NCD. So, but the the cost of finance for the NCDs will stay there for us in the Q4 because of the make-whole provision in our NCD redemption claim that we have to repay them for the 12 months make-whole. But from the Q1 onwards or FY23 onwards, we expect a saving of more than 100 crore rupees approximately, I would say more than 100 crore rupees on the interest side on this part, and which will definitely convert into very healthy debt to equity ratios and very healthy debt to EBITDA ratios also. Moving to the breakup of various revenues which we said Q3. So if I distribute our revenue into three segments that we discussed, that our payment solution segments constitute around 75% of the revenue of total 100%. If we further dissect this 75% revenue, 60% of the revenue comes from the cash solutions, which is ATM outsourcing and the cash management business under a wholly owned subsidiary, and the digital business constitutes 15% of the revenue. Our banking automation solutions contributed around 5% of the revenue, and other automation solutions consisting of retail automation, petroleum automation, and color automation constitute approximately 19% of the revenue on the Q3 of FY22. So, now I will take you through the 9-month performance of the company on a consolidated basis for FY22. On a 9-month basis ending December 2021, the total revenue of the company stood at 1,392 crore rupees versus 1,238 crore rupees in nine months of FY21, which is a growth of around 12% on year-on-year basis. Our segment mix of the revenue, the payment solution constitutes 76% in this revenue. 61% came from cash solutions and 15% constitute from the digital solutions. Similarly, banking automation constitutes total 10% of the revenue mix, and other automation contributed 14% of the revenue. The EBITDA of this 9-month period stood very strong with 354 crore rupees of EBITDA in 9 months versus 280 crore rupees of EBITDA in Q3 of FY21. The growth of 26% year on year. Similarly, the EBITDA margin has also improved significantly. It has moved to 25.4% margin on a 9-month basis versus 22.6% of the corresponding period. The 9-month EBIT has also increased. It's moved to 167.6 crore versus 85.8 crore rupees on a 9 months FY21, which is a growth of 95% year on year. As I explained, EBITDA before India. So if we take EBITDA without India's 1 month adjustment on a consolidated basis, the EBITDA stands at 243.6 crore for 9 months ending December 21 versus 158 crore rupees 9 months ending December 2020. So this is a growth of 53% on year-on-year basis. If you see on the cash flow basis of the company performance for last 3 years, our operating cash flow to EBITDA generation is more than, I would say, 85 to 90% level, and there is no difference in 9 months period also. We continue to generate a very high level of cash flows during 9 months. So we believe that this strong cash flows and the central balance sheet of repayment, we are ready to capture all the opportunities and all other business strategies that we have planned, and all those strategies which has already been executed, whether it's a digital strategies or a cash strategies. So with this, I would like to give it to the team chorus to take us on the Q&A from the financial performance we have shared the details.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hello. Yes, sir, thanks for the opportunity. And so my first question is on the ATM business. So, what kind of recovery we are seeing in the number of transactions per ATM per day? So, are we near to the pre-COVID numbers, which was around 105 to 110 transactions per ATM per day? And also on the relations part, are we witnessing any uptick from the change in the interchange fees, which was effective October? And also, structurally on the ATM business, what will be drivers for this business, as the number of ATMs at this system level is almost having a very you know, uh, having a low single digit kind of a growth. And next question is on the CRM business. So we have added around 462 CRMs in the last 9 months, and currently we have around 4,000 CRMs. So I know CRM is a growth driver for the company. So what is the target in terms of the number of CRMs we are going to add in the next 1 year? And if you can explain the unit economics, the revenue model and the profitability of the CRM machine, is it similar to the ATM business?
Thank you, Amit. I'll take one by one. Specifically with respect to the performance of the companies of the ATM outsourcing business. So if you see on the 9-month basis or with the 9 months last year, so our total revenue on the ATM outsourcing business, which is again part of our payment solution business, we call it as a cash business, which covers both ATM outsourcing and cash middle business put together for our subsidiaries. So on that perspective, we have I would say we have overachieved from growth is there with respect to cash and ATM outsourcing. Since we have both the contracts in our hand, we have a transaction fee-based contract also, we have a fixed fee-based contracts also. So on a fixed fee-based side, definitely we have seen the growth because of various, like you said, CRMs which we have deployed for a time. Many of those CRMs constitute our fixed fee-based revenue also. So we have seen a significant growth in those fixed fee revenue. On a transaction fee-based side, we have seen the transactions. If I take you to the transaction history that we have seen from the pre-COVID level when it happened in March 20. From March 20 till March 21 when we reached, we saw the transaction were almost coming back to the pre-COVID level. Then there was a second wave started off, unfortunate for all of us, in April 21, and then we saw a dip in the transaction April 21, and again the uptake was there immediately, and we've seen the transactions were inching back to the pre-COVID level. So if I distribute this ATM transaction fee-based contract or CRM contract, we have seen the CRM is almost crossed to the pre-COVID level because there the rush at the branch and deposits are going parallelly. If I distribute my revenue in 3 contracts like PSUs banks or public sector banks, we have seen the largest public sector bank which is in our portfolio has almost reached to the pre-COVID level. On the public sector bank wise, we have seen the transactions are coming back to the normal, but I think it is still not reached to the pre-COVID level of 100%. I think by end of this March and I think by end of April and maybe the new session when all the offices are opening up and the transactions are coming back, cash and circulation is almost back, we believe this transaction will come back to the pre-COVID level. Now coming to the CRM deployment, so as you rightly said, we are continuously aggressively deploying the CRM. We have a good order books in hand from the CRM deployment also. Banks are also going aggressively to ensure that all their branches should slowly get covered through CRM deployment so that they can transfer those people who come to the rush to the machines and they can simply get the credit and deposit immediately. With respect to unit economics on the CRM side, there are 2 types of contracts that we have. One is on the fixed fee basis and another is on a transaction fee based contract. On a transaction fee based contract, our revenue comes from both sides of transactions, that since the CRMs are getting utilized for a transaction or the withdrawal also and for the transaction for the deposit also. But wherever the CRMs and the other CRM contract where we transactions, ATMs, CRMs are only utilized for the deposit of the cash. There we have only fixed fee contract because still we are also in the process of getting more and more people accustomed to this kind of deposit machine. But wherever the machines are available that can be used for withdrawal, I think we have the contract with the bank which is on the transaction fee based model. So unit economics goes on very market-driven pricing, I would say, which has rate for per transaction for a cash withdrawal, rate per transaction for cash deposits, rate per transaction for non-cash deposits and everything. So unit economics wise, from the IRR perspective, they are very healthy contract generating IRR up to, as I said, it's a 9-year contract, 10-year contract. The healthy IRR ranging between, I would say, around 30% plus to 35 to 40% plus on the CRM side. On the deposit side, as I said, we are only deploying it only for where the fixed fee contract. The IRR is different because right now the machines are only using for deposit functionalities.
Okay. And my next question is on the OMC business, which I think falls under the digital category. So we have a tie-up with the OMCs, and we intend to add a POS across all these OMCs, and there were aggressive targets in terms of adding like POS machines across the OMCs, right? So, but based on the current monthly run rate in terms of additions, we are falling behind, and in terms of the in terms of the GTV also that we are generating per POS per month is only around 3.6 lakhs like YTD. So what is happening there? If you can have some more color on that.
Sure. So Amit, if you see on the OMC side, as I said, we have a very, very strong long-term contract with all the three OMCs. With this contract, we have a clear visibility of covering more than 50% of the retail outlets over a period of time. But what we have seen is that the deployment was definitely going on as per the plan we were saying, but because of this Omicron wave, which started off way back, I would say last week of December and continued for the full month of January, and it started easing out now. What we have seen is that there is a slight, I would say not a delay, but slight push of the execution of those POS machine deployment by all these OMCs. And considering the nature where we deploy these POS machines at various retail outlets all across the country, the communication with respect to the delivery, the communication with respect to the executions has slightly pushed this deployment. So what the target that we have kept in mind by deploying more and more machines by March 22, but we could see that it gets pushed maybe by another quarter, maybe by June 22 we'll have complete deployment. But the most confident thing for us is that we have a complete order book visibility in our hand, and with this order book visibility, we have a clear visibility of the total revenue that will come from the OMC once we get the full deployment. So as Ravi has also mentioned, we have deployed around 1,000 plus POS machines, and we have another visibility of 50,000 POS machines which is getting deployed in this balanced OMC. Coming to the GTV part, Amit, if you see the total GTV which company has achieved, the release which we made along with our results is around 17,000 crore of GTV which we have generated in last 9 months against the total deployment of 39,900 POS versus 28,000. So if you take if I take 39,000 as a base for 17,000, GTV comes out to be around 4,90,000 rupees as per our working. And if I take an average of the deployment, which generally happens because the deployment of 11,000 POS happens over a gradual period of last 9 months, the GTV comes back to be around 5,70,000 rupees. In case there is any disconnect between the values and the discussion, definitely, I mean, we can definitely share with you our workings also through SGNA, and we can correct that 3,50,000 and 3,60,000 which you just mentioned. Sorry that.
Okay, sir. Thanks for the clarity and all the best for the future.
Thank you. Thank you.
Thank you. The next question is from the line of Manik from JM Investments Limited. Please go ahead.
Hi, thank you for the opportunity. Just wanted to understand what caused the slight weakness in terms of the payment solutions business in 3Q on a sequential basis, and if there are any one-time costs there, and if you could also help us understand what's happening on the cash management side, given the fact that generally there is an expectation in the industry that the realizations will go up given some regulatory requirements. Thank you.
So, sir, if you see our financial performance with respect to the payment solutions, which constitute our, like I said, ATM outsourcing and cash management business. So on a 9-month basis or on a quarter-on-quarter basis, we have seen a significant improvement in our cash business, specifically in the secure value. So we will share those segmental numbers also, which covers our payment solutions. So we have seen a significant growth in our cash management business, primarily because Secure Value happens to be the company which is compliant with respect to all the guidelines of RBI and MHA on all India basis. And if you see in last 2 to 3 years, we have significantly added more than 20,000 ATMs in our portfolios. We used to be handle around 28,000 approximately ATM in March 19, and today we have already touched more than 45,000 ATMs in our portfolios. So from that perspective, cash management business, we believe that we are very well positioned, and we are commanding, as we said, we are the second largest cash management company in the country. We will continue to command that market share, and we believe that the kind of geographical presence that we have, covering more than 2,200 cities, we believe this penetration will continue to grow. Similarly, on the ATM side also, if you see on the sequentially on quarter-on-quarter or year-on-year quarter, even though we have seen a lot of impact because of the Omicron wave or other lockdowns and everything, we continue to maintain our revenue in matching with what we have. So if the number that I have with me, like in payment solutions, our total revenue is 330 332 crore on December 20, which moved to 365 crores in December 21. Similarly, if you see on a 9-month to 9-month basis, our payment solution revenue was 926.4 crore in December 20, which has increased to 1,039 crore in December 21. So if I further distribute this growth, this growth has primarily come from both the businesses. One from the digital business, which was 130 crore in 9 months ending December 20 and moved to 200 plus crore in December 21. Similarly, our cash minimum business, which was around 137 crores in December 20, moved to 176 crore in 9 months December 21. So from that perspective, I think from the business strongness and the business model perspective, I think we have a very, very strong line of business with us, and positioning ourselves as a integrated omni-channel payment service provider and integrated cash payment service provider, offering all cash requirement, all the ATM requirement. We believe that we will be continue to gain that market share. Like in 2 or 3 largest private sector banks, we constitute and manage more than 50% of their ATM network, 40% of their ATM network, and we believe that we will continue that leadership position.
Saurabh, thank you for that answer. Actually, my question was related to the sequential dip in terms of revenues that one has seen in the payment solutions piece, which has come down to about 366 crores versus 375 crores in the second quarter, and also the decline in terms of the segmental profitability, wherein we've seen the segmental profits for the payment solutions piece going down from about 88.5 crores in second quarter FY22 to 76 crores. So if you could help us understand, are there any one-off costs there, and what drove the decline? Because you said the cash management business has grown, the ATM, the digital business has grown. So is there a decline in terms of the revenues from the ATM outsourcing business?
So if you see see sequentially from 375 to 365 crore, so our cash management business has definitely grown. We saw I would say a 10 crore rupees dip in our outsourcing revenue, which was 240 crore to 230 crore. It is again primarily because of slight lockdown and Omicron impact on our revenue. Similarly, on the digital side also, it moved down from 79 crore to 70 crore as per the number which I have. So it is primarily because of 2 reasons. If you see on the POS deployment, our revenues are directly linked to the sale value of the transaction. So the deployment and the POS values continue to grow, but it is the major impact of this 5-7 crore rupees which has come to our number is primarily because if you see that there is a reduction was in the diesel price which happened in the month of December last year, which was a reduction of around 10% in the diesel price. So since there was a reduction in the diesel price, it has a direct permutation to our revenue also, because we get a percentage of revenue from the business of values which get transacted on the POS machine. Now coming to the point with respect to the segment result, which has moved from 88 crore to 76 crores, sir. So it is there are 2-3 costs which has come to us in this quarter 3 of December 21 versus September 1. One, that company has issued the ESOPs to the employees before this IPO, and there is a ESOP cost valuing this ESOP at the fair value accounting. So there is an incremental cost of around 5 crore rupees has gone to the P&L, and this is payment solution constitute the largest pie of that business. That cost has been noted in those contracts, and there is a slight increase in the manpower cost because of the incremental which company has given in this given to the employees. And the third one, as I said, the cash business of the company has increased from a number perspective from 55 crore to 64 crore. So cash business, sir, is directly linked to the manpower of the company. So there is a slight increase in the subcontracting cost where we have a third-party payroll hiring of the company. So rest all the parameters remain same. But having said that, since these costs are is one time in nature, I would say, or it will not be like ESOP cost will be not a perpetual cost. It will be kind of a one time in nature. Over a period of time, it will get over a period of time. And as we continue to grow, the operational skills will automatically kick in, and this cost will not grow in the same proportion. And after Q3 to Q4, I think the return ratio will be better.
Sure. Thank you for the detailed explanation. And just one last clarification on the POS deployment. So out of the total outstanding order book of close to about 45 or 50,000 odd POS machines, when do you expect to essentially complete the rollout for the outstanding order book?
So, sir, if you see, we have already deployed around 40,000 retail outlets, and we already touched across 17,000 crores of our GTV, and the rest 15,000 crores is to completely in the pipeline, and as we said, our target is to close it by the June quarter.
Okay. So you're saying about 45,000 POS deployments by over the next 5 months?
Next 5 months. Yes, absolutely, yes.
Okay, sure. Thank you and all the best for the future.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Nitin Sharma from Money Control Research. Please go ahead.
Yeah, hello, I'm audible?
Yeah, Nitin, you're audible very much.
Yeah, thanks for taking my question. Two very quick questions. First of all, how should we see the banking automation segment? Both revenue and profits, they appear to be volatile. That is one question, and then I have a follow-up.
So, Nitin, if you see on the banking automation side, we happens to be one of the company who into the manufacturing of the ATMs also, and we manage those ATMs. Once we sell those ATMs to either banks or to any of the MSPs, or MSP means any other managed service provider who handles those ATM outsourcing contract on behalf of various banks. So the most important part as for us, and I'm sure for the industry also is a similar line, that whenever an ATM is sold, it goes along with the AMCs or life cycle maintenance of those contracts. So whenever an ATM is sold to any of the parties, as I said, banks or the MSPs, we get a long-term contract for servicing those ATMs as well. Now in servicing those ATMs, since we are the OEMs of the ATM, we happens to be the exclusive partners or vendors for the servicing of the ATM. So we earn a consistent long-term service revenue from those contracts. So every year, as I keep on increasing my sales share, I will keep on adding those ATM in my portfolio where I earn the service revenue. Now, many things which has happened in specifically in last 1 year, and we believe it will continue for next year or so also, is that there has been a lot of requirements and regulations which have been mandated by a regulator that all these banks or MSPs has to ensure that ATM network is compliant with respect to various requirements. The first one, I'm sure if you have noted out, there is a requirement from a regulator which says you have to comply with the cassette swap implementation by all the banks. So which means all the banks which is not under outsourcing contract business for our vertical, where we have sold the ATM into the bank or any other MSPs, where these ATMs may be managed by any other MSPs or bank directly, the bank has to create an infrastructure or has to buy a cassette from us to ensure that cassette swap is immediately implemented on those ATMs. Second, there is another requirement from the regulator that they have to upgrade, or there is another, not by regulator, that they have to upgrade their softwares also, like from Windows XP or Windows 7 to Windows 10. Similarly, they have to upgrade their software with respect to the terminal security, which is antivirus software and everything. And many of those regulatory requirements or other IT requirements or compliances has to be met by bank. So from an order book perspective, we believe, or we have a very, very strong order book for banking services, which we have delivered so far, I would say on a 9-month basis also, and which we have going to deliver for next 12 months as well. So if I give you a number perspective, on a 9-month basis, banking automation services has delivered approximately 110 crore on service revenue. And if I compare it with last full year revenue for banking services of 107 crore rupees. So still 3 months to go with very strong order book in hand, and we believe that because of the sheer size of the ATM that we have, we manage more than 25 to 30,000 ATM under AMCs. We believe that this order book will continue with us, and we already have a strong order book, so we see a good visibility of banking service revenues. At the same time, banking automation will continue to grow.
Thanks. So just to understand, how big is the current order book? Some idea, and if you cannot share the number, then probably book to bill ratio kind of a metric if possible.
So I would say my order book currently stands 2 times of what we delivered last year as a revenue.
Okay. Understood. Thank you. And the last question, since there was some share, the ESOP related expenditure P&L, how should we see it going ahead? I mean, will it be a consistent item? Then it's a bookkeeping question. So Will it be there consistently, or a certain portion is there? How it will be deployed? Thank you.
So, Nitin, the ESOP which has been given, definitely the intention of the organization and for the management and the board is to definitely, one is to reward the employees and reward the future performance also. So the ESOP that we have issued, they have a vesting period of 3 years, equally divided into 33%, 30, and 40% in next 3, sorry, not 30, that is 30, 40 for 3 years. And starting this vesting with from the August 2021. So, basis that is, we will have this cost coming at for the over a period of 3 years. But because of this weighted average cost estimate, everything and the accounting perspective, you will see that 50% of cost will get amortized in year 1. Then around another 30% will get amortized in year 2, and 20% will be in the year 3. And as we grow, as we move forward, the management will definitely come out with may come out with a new ESOP scheme, but it will be there totally on the recommendation and the approval of the board and the shareholders, that how to take it forward and give it to the employees.
Yeah. Okay, thank you.
Thank you very much. The next question is from the line of Avdut Joshi from Newberry Capitals. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. We have mentioned that OMCs, you have long-term contracts. I would like to know what do you mean long-term? As you mentioned, in the case of banks, you have 7 to 10 years contracts. What is the case in the case of OMCs?
So thank you, Abdul, for this side. So from with respect to the OMC contracts, like we have contract with all the 3 OMCs. And all the 3 OMCs have a different nature of tenure of the contract. But just to give a ballpark picture, the contract range between, I would say, around 4 years to 7 years, depending on the various deployment that we're doing on behalf of this OMC.
Okay, understood. And secondly, on the fixed fee and the transaction fee, could you please provide the split between this? How much part of the revenue of a segment is into fixed fee and the transaction fee?
Sure. So, largely, sir, the contracts that we have with large private sector banks and the largest PSUs banks, so we have a transaction fee-based contract with them. And other portfolios banks that we have in our revenue stream, they are on the fixed fee contract. And if I split this revenue, we assume that around 60 to 65% revenue comes from a transaction fee-based contract, and around 35 to 40% approximately revenue comes from a fixed fee-based contract.
Understood. Thank you. Again, I would like to know about the revenue share from the global Transact, and how do we see going further, growing that revenue going further? Because as you mentioned in the opening remarks, you have a presence in 5 countries right now, and how do we plan to? So we are whatever in India, our learnings have been, we are deploying into other countries, as I understand, in Indonesia. So how do we tend to grow it further? That's what I would like to know.
So, sir, if you see our total revenue stream, as we said, we have got a very good position, and we have got very good product, both from the cash side and the digital side. And we have I would say, experience of delivering those products in Indian market, be it ATM, be it CRM, be it POS solutions and everything. And as also Ravi mentioned, that the product, I would say, the live product of POS deployment, integration of POS with the petrol stations, integration of POS with the retail outlet petrol stations, fast lane product which we have developed or delivered with HPCL and already in the market. We continue to keep our focus on the same line and exploring those markets on a similar line of products, so that all those development which is done internally in-house by our software team or internally by our own team can be leveraged on those economies also, because those economies are also growing with respect to various innovation space and various product lines. But having said that, if you see on the revenue stream side, their contribution to the revenue of the company is around 5% right now. And as Ravi said, we got all these joint ventures completed, joint venture done. The execution process has already initiated. Maybe for next 1 year, the revenue maybe in the similar lines. But I think go forward basis, once those strategies come into play, come into practice, get actually implemented, their share will definitely grow over a period of time.
Understood. Understood. Thanks. Just one clarification about banking automation. Can we consider, as and when we will sell the ATMs, the revenues will be higher in that segment? So banking automation revenue would be lumpy, excluding the service revenue. Is that a fair understanding?
On the product side, you can say, but services will be a continuous running revenue, so that will always be consistent. Yes, it will keep on going.
Okay. As and when you sell more ATMs, services revenue will keep on going, right?
Keep on going. Yes.
Thank you. That's it from my side. Thank you.
Thank you. The next question is from the line of Nirmal Bari from Samisha Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. My first question is on the cash automation part. So, on the cash business part. So, do we have an outstanding order book over there in terms of number of ATMs or CRMs to deploy over the next few quarters or months?
So, yes, well, so we as we say, whenever we enter into a contract with the bank, maybe public sector bank or private sector bank, so generally how does it happen is that bank always gives us the indication that what is their strategy to grow the business. Because banks also run their own internal strategies, how they want to grow their network of branch, how they want to grow their network of CASA, how they want to grow their network of debit cards. So we get a lot of intelligence from them, and we always get a broad guidelines and understanding with respect to how much expansion and how much plan they have. But generally the agreement that we enter into contract always cover that these are the scope of services and everything, and as bank continue to grow, as bank continue to expand the network, they keep on issuing us the purchase orders. So on our order book side, like we have contract with all the big banks, we continue to run that order book, and the moment those order books are near to the closure, we automatically get an update order books. So on a consistent basis, you see, we keep on adding around 1,500 ATMs on every year on basis. So all those deployment always happens with the, I would say, a structured planning with the bank. So even though the exact POs will not be in hand, but the understanding and the guidance is there from the bank that we have a clear visibility of approximately how many ATMs or how many CRMs bank is going to get deployed in next 3 months timeline, 6 months timelines, 9 months timelines, or a 12 months timelines.
Because the number of ATMs that I'm looking at your press release, and the number of ATMs have slightly decreased by about 350 odd ATMs in the last 9 months. So is this like a replacement between ATM and CRM that is happening?
May not be necessary, Nimal, because generally what is happening right now, most of the CRMs which are getting deployed by many of the banks, they're largely deploying these ATMs at the at the on-site, which is basically means a CRM at the branch network. And the ATMs that we deploy, they cover both on-site and off-site. So the slight dip, which if you see from the ATM that we've deployed from of 350, this is primarily because of many reasons. Because there could be reason that it's in our interest also sometimes, because the contract also gives us right. And in case ATM is not generating the right number of transactions or period of time, we have a right to close those ATMs or relocate those ATMs also. So that could be one of the other reason also, that where we might have closed those ATMs and looking for a relocation to a new site. And the second instance could be a reason that if you see there is again a lot of places and a lot of locations, a lot of pockets, we have those lockdowns also there. So since because of the lockdowns in the offices, because we deploy these ATMs in various corporate offices, corporate centers, like of any of the big IT companies, any of the big retail stores also. So in case those retail outlets are closed, so we will not bill those ATMs as a revenue. So automatically that will not come in my revenue counts also. But the third one, as you rightly said, could be that bank is expanding their network and they see the huge demand coming for the deposits right now. But right now banks are not replacing all the ATMs. They are putting this as a second machine at the branch counter, so that in case those deposit machines for some reasons are not able to function, because as I said, most of the banks right now are using these CRM machines for depositing the cash. They are not using this machine for withdrawing the cash. So except for one of the contracts or one of the bank where they are using these machines for both depositing and withdrawing, the replacement is possible. But otherwise, for all other contracts that we have, since these machines are only used for depositing the cash, so they are not replacing any of the ATM as of now.
Okay. And on the interoperability of CRM, has that become operational, or there's still time for that?
So a lot of banks have already got into the on this platform, but still the certifications are going on from the other banks. So we hope that within a year's time, I think all the banks would be on this platform, like how it happened for NFS for ATMs. So the certification is in process, but a lot of banks have already are there on this ICD platform.
Okay. And one last question on during your initial commentary, you talked about loan to the merchants based on the POS outstanding. But since we are just POS providers, we wouldn't have access to this data, right? And secondly, we are not an NBFC, so we won't be able to get that loan on our books. So how are we getting access to this data, the POS outstanding or the POS billing data, and then with whom have we tied up for this loans?
So we are doing the daily settlement for the merchant, so we know exactly what is the amount and the number of transactions and the ticket size we are processing. So that data is available, and based on that, we are not directly providing any credit, but we are in the process of tying up with various NBFCs and the banks, and it would be more on a referral model. But that data is definitely available to us, and based on that data, the various loans would be provided.
So, but we would be able to use that data, is it?
Absolutely. That data is not an issue at all. We can't use the card data and other things, but that is not a problem.
The settlement data we can use?
Yes, absolutely.
Okay. Thank you.
Thank you. The next question is from the line of Pushkar Jain from Sequent Investments. Please go ahead.
Hi, sir. So I just have one question. As I've seen year to year, our payment solution business, the revenue has grown, but the profitability has shrunk a little bit. As you said, it is because of the subcontracting cost probably. I just would like to know, is there some operating leverage that we are not getting yet, and because we are deploying more machines, we might get it in the future? I just want to understand the dynamics of how some granularity about it.
So, Pushkar, as I definitely said, on a quarter-on-quarter basis, there is a reduction in the profitability if you see on the segment side, the segment result. But at the same time, if you see our 9-month YTD number with the 9-month number for the last year, there has been an incremental revenue for us. So the EBITDA generation for the 9-month period is definitely improving from that perspective. So if you see on a holistic number, 180.7 crore of segment results has moved to 203 crore rupees of segment results. So the percentage margins have remained same, but on an overall basis, the value on a value basis, it has grown. So from a deployment perspective, as I said, we are because of this, either because of Omicron or from the other factors, we believe that this number will grow as we move forward. Because if you see on a FY21 performance that we have achieved last year, the March 21 performance was much higher than this, and as we move forward, as we grow, or as the lockdown will go out and the operational leverage or the other leverages that start kicking in to us, the profitability will improve further. But on a 9-month basis, on the company's performance, which has seen the COVID wave 2 and which has seen the COVID wave 1, or we have seen the COVID wave with respect to Omicron, specifically this 9-month period, this has got impacted. But I think we have sustained and maintained that margins which was there for last year to us, and we believe this will grow further as we move forward and grow our cash payment business, both from the cash management side and ATM management side.
Okay, so we do not see any increase in subcontracting revenues from here on. How do we, again, proportionately in terms of?
If the cost increase, definitely the cost is definitely proportional to the revenue only. So it will go to the moment I see incremental in revenue, then we can see that there will be some incremental cost, but otherwise then there will not be any cost. So any increase in the transactions or any increase in the revenue stream coming from the transaction increase, or as we discussed on the interchange price revision which has happened, so automatically whatever increased transaction, incremental transactions or increase in the interchange fees or any other revision from the contract or any other leverage will automatically go to my bottom line. It will not increase my subcontracting cost or any other cost.
All right, and that's all. So we will get the operating leverage. That's what I want.
Absolutely.
Okay, thanks a lot, sir.
Thank you. The next question is from the line of Dipti K from Kothari Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. I just wanted to ask that can you give us some sense on FY23 guidance?
So if you from the numbers perspective, I think Ravi has covered in his speech that we believe that we have delivered a very strong performance on a 9-month basis. But considering that because of the Omicron wave which has impacted our some number on FY22, we have a guidance given for FY22 with to all the group. On the FY23 perspective, we believe that we should close this FY22 with whatever we are targeting and the management believes, and we would like to give more detailed guidance on FY23 maybe in the next call. But couple of things which is very critical for us and which is going to be very positive for us in FY23 is that I think one which Ravi has already covered, that there will be substantial saving on the interest cost of the company, and then there are a lot of other products like as we covered that we're going to deliver our full OMC platforms and OMC deployments for the POS machines. Similarly, various other CRM deployments. There are a lot of other guidance, as I said, on banking service for delivering this banking service contract, upgrade of cassette swap, upgradation of software, upgradation of lot of security software, and MHA price increase, cassette swap price increase on the OS side. So from that perspective, we believe that FY23 could be that definitely will be a very strong year for us and should be and our guidance as we share more detail in the future will reflect those strong numbers also.
Okay, thank you so much, sir.
Thank you very much. I now hand the conference over to Mr. Ravi Goyal for closing comments.
Yeah, thank you everyone for joining today's call. I hope that we were able to answer your questions satisfactorily. If you have any further queries, please contact SGA, our investor relations advisor. Thank you so much. Thank you.
Thank you very much. On behalf of AGS Transact Technologies Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.